Hello, my name is Elliot Gu and I'm the editor of The Energy Strategist. In a webcast yesterday I talked a little bit about the natural gas markets and in particular the role of liquefied natural gas in the global natural gas markets. And specifically I spoke a little bit about how European natural gas prices currently are considerably higher than prices here in the United States. On an equivalent basis, the price in Europe is about $10 per million BTUs versus closer to $8 per million BTUs here. And so that means a lot of liquefied natural gas shipments are actually heading for Europe rather than into the U.S. market, which is also helping to restrict supplies here. The other factor, looking a little bit more closely at natural gas markets, there are a couple other factors to keep an eye on a little bit longer term. This morning at 10:30, the government released its weekly natural gas storage report. Every Thursday at 10:30 they release a report, unless of course there's a holiday on Monday and then it's on Fridays. But the important point to note is that natural gas drawdowns last week were about 275 billion cubic feet. That's far, far larger than normal, even for this time of year. Obviously natural gas drawdowns tend to be highest in the winter months because that's when heating demand is highest. But still, even on a seasonal basis, that was a lot higher than you would normally see for this time of year. Natural gas inventories are still a little bit above average. They have been above average for about a year and a half now. However, we're about as close to average as we've been in terms of gas and storage in this country over that period of time. And in fact, if you look at it on a regional basis, natural gas inventories in the western United States are actually below average for this time of year. What we've really seen is that, contrary to some predictions that we saw back in December, January has actually been a relatively cold month overall, or quite close to average for the country as a whole. And that's contributed to faster than expected drawdowns, I believe, over the course of the month. I do believe we're starting to see somewhat of a turn in the natural gas markets in the United States. I do believe we will see, going forward, natural gas inventories remain around that average levels, but certainly not as bloated as they were over the past, in the latter part of 2007. I think that will keep a floor under natural gas prices. Longer term, I expect to see gas prices go up towards that $10 per million BTU area because that's what's needed if the United States hopes to attract liquefied natural gas imports. This is also pretty good news for a lot of beleaguered natural gas stocks. When I talk about that, I mean some of the services names that have been really hit due to a declining drilling activity over the last year and a half. The other point, a little longer term, I want to bring up about natural gas, which you don't hear quite as much, is obviously natural gas is a lot cleaner than most other sources of energy that we use in the United States. It has almost no emissions of sulfur dioxide, mercury, or nitrous oxide, unlike coal. And on the carbon dioxide front, emissions of carbon dioxide from burning natural gas are only about half of what they are for coal. So natural gas is also seen as a potential alternative fuel out there in terms of bringing down emissions of all sorts of pollutants and greenhouse gases, etc. An interesting point to note about this is, unlike alternative energy, which really can't ever be expected to replace a large chunk of baseload generation capacity, in other words, always-on power supply, natural gas could be a more important contributor in that area. And that's the major reason I think we're seeing such a large uptick in gas demand in Europe, as well as I think that's coming more and more so in the United States. If you listen to a lot of the utilities out there who are investing, of course, in alternative energy, they're also investing a lot in gas capacity because they believe that's one way they can reduce their emissions of things like carbon dioxide ahead of any potential carbon dioxide regulation that might come to the United States. So I think longer term you're going to see a lot more attention focused on the natural gas market, certainly than you have over the last year. And in fact, I think a lot of those stocks that are levered to natural gas might be in a pretty good buying position here relative to some of the oil-related names that have really run up over the last 6 or 8 months. Thank you very much.